between income tax, sales tax, value-added tax, property tax, payroll tax, etc. The average person pays 30 to 50% in taxes. That means working 4 to 6 months of the year just to pay the government. On average, that adds up to about 20 years of your life that you never get back, completely devoted just to paying taxes. That's like a prison sentence. But there is some good news. Once you understand some basics of the tax law, you'll see that you can legally and ethically reduce your taxes dramatically, sometimes even to zero. I'm not talking about tax evasion or tax loopholes. I'm all for paying your fair share in taxes, but why would you overpay on your taxes if you don't have to? And wouldn't you prefer to take your retirement income tax-free? So this video is all about how to become a tax-free millionaire, completely legally and ethically. If that sounds good to you, let me know by tapping the like button on this video. I really appreciate that. Thank you. If you're new to this channel, I'm Penelope Jane Smith, and for the last 20 years plus, I've been on a mission to provide people with the financial education that they never got at home or in school, so they can create financial freedom. Now, quick disclaimer, I am not a tax expert. This training is not tax advice, so double check everything with your tax advisor, okay? Now, let's dive in. There are multiple ways to become a tax-free millionaire, and in this video, I'll share the easiest and most straightforward way that will work for most people without taking a lot of time away from your life or business. And just so we're on the same page, what is a millionaire? You are a millionaire when your net wealth is $1 million or more. What's your net wealth? Well, the proper term is net worth, but I use the term net wealth because I don't believe that your worth or your value as a human being has anything to do with how much money you have. Your net wealth is your assets minus your liabilities. What are those? Well, your assets are things you own that are worth money. Real estate, stocks, bonds, gold, crypto, collectibles, even personal property like your car, furniture, jewelry, etc. Your liabilities are any debts you have or any money you owe, like a mortgage, home equity line, car loans, student loans, personal loans, or credit card balances. To figure out your net wealth, you add up how much all your assets are worth, and then you subtract how much you owe on all your debts. If your assets minus your liabilities ends up being $1 million or more, congratulations! You are a millionaire! Now, what's a tax-free millionaire? For the sake of this video, a tax-free millionaire is when you're a millionaire who can take your retirement income tax-free. In this video, you're gonna learn how to grow money tax-free and how to take your retirement income tax-free. Like I said, there are multiple ways to become a tax-free millionaire. For example, there are several ways you can become a tax-free millionaire through real estate investing. You can also become a tax-free millionaire through creatively structuring certain types of life insurance. These examples are beyond the scope of this video, but if you want me to do more videos on either or both of those topics, leave a comment on this video and let me know. Right now, we're gonna focus on my favorite strategy for how to become a tax-free millionaire because it's the easiest and the most straightforward, and pretty much anyone can do it without a lot of time or hassle and without having to come up with a big chunk of money to invest up front. I love this because it's so easy. You can get started immediately with a few dollars, set it up once, and then put yourself on prosperity cruise control. How this works is you invest inside of a specific type of tax-sheltered retirement account. In the United States, my favorite type of retirement account is a Roth IRA. And if you know you make too much money to qualify for a Roth IRA, stick with me because I'll show you the workaround. If you're in Canada, a TFSA or tax-free savings account works basically the same way. And if you're in the UK, I believe the closest equivalent is an ISA, or individual savings account, that lets you invest in stocks and shares. Now, because I live in the United States, I'm going to talk specifically about how to become a tax-free millionaire using a Roth IRA. If you don't live in the United States, you can use the almighty Google search for Roth IRA equivalent in your country and see if you have something similar. IRA stands for Individual Retirement Account, and the Roth part has to do with how its tax benefits work differently than the tax benefits of a traditional IRA. It's named after Senator William Roth from Delaware, who proposed this type of IRA in 1989. So, how do Roth IRAs work? First of all, you open a Roth IRA with pretty much any brokerage or financial planner, ideally one without trading fees. Personally, I like online brokerages, and my favorite right now is TD Ameritrade. If you want to open a Roth IRA with TD Ameritrade, you go to tdameritrade.com and click Open New Account. Then you select Roth IRA, click Open a Roth IRA, and fill out your information and follow the prompts until you have your account set up. My videographer is cracking up right now as we're filming this video because while I was having my hair and makeup done, I walked him through setting up his Roth IRA. So how long did it take, Drew? A few minutes?
5 minutes.
5 minutes, yeah. So you can totally do this. Now, the account itself is not an investment. It's just a type of account, like a savings account or a checking account is a type of account. A checking account is an account that lets you write checks and use a debit card, right? A Roth IRA is a type of account that lets you invest with certain tax benefits. Once you have your account set up, you need to put money into it so you can invest it. Here's the thing with the Roth IRA. You put after-tax money in there. You don't get a tax deduction on the money that you put into a Roth IRA. So you might be thinking, wait, what? Penelope, I thought we were talking about saving taxes. Isn't it better to open a traditional IRA and get a tax deduction on what we put in? Well, depending on how close you are to retirement and what kind of a rate of return you're getting on your investments, the traditional IRA might work better. So you'll want to consult with an expert about your unique financial situation and see what makes the most sense. But in my experience, most of the time, the Roth IRA is the best option. If you want to make millions tax-free and take your retirement income tax-free, you can't do that with a traditional IRA. You can only do that with a Roth IRA. Because with a traditional IRA, you get that nice tax deduction when you put money in, and you can invest for retirement tax-free, but then you have to pay taxes later when you take the money out. And some people think, okay, that's fine. I'll probably be in a lower tax bracket then anyway, so I'll pay less taxes. I disagree. First of all, can you be completely sure you'll be in a lower tax bracket when you retire? I mean, inflation is pushing us all into higher tax brackets all the time. And what if you want to retire with more income and at a higher standard of living than you have now? And who says the government won't decide to hike up your tax rates? But let's say you are in a lower tax bracket when you retire. Here's the thing. You're not just getting taxed on the amount of money you put in. You're also getting taxed on how much your money has grown. So you can grow money tax-free for a while, but then it's time to pay up. And if your investments have done a halfway decent job of growing for you, most of the money in your account isn't going to be the money you put in yourself. It's going to be growth, the money that your money went out and made for you. Let's break it down. If you start investing $300 a month at age 25, and you earn an average of 8% on your money, by the time you're 65, you'll have over $1 million. Actually, $1,054,000 and change. At that point, you'll have invested a total of $144,000 of your own money. If you're curious about how I came up with that number, that's $300 a month times 12 to make it per year, and then times 40 for 40 years, from age 25 to age 65, okay? The other $910,000, which is $1,054,000 minus the $144,000 you put in, is all growth. It's all the result of your money growing and multiplying for you. That's the power of compound interest, which means your money makes some money, which gets added to the original money and goes out and makes even more money, and so forth and so on, like a glorious snowball. The power of compound interest is totally mind-blowing. Small adjustments can help you build massive wealth, allowing you to be at choice with what you do at your time, change your family's future, and support causes that you believe in. Now, if you did this in a Roth IRA, you'd have to pay taxes on that $144,000 that you put in, but you'd become a tax-free millionaire and be able to take your retirement income tax-free. If you did this in a traditional IRA, you'd have gotten a tax deduction on that $144,000 that you put in, but now you're going to have to pay taxes on $1,054,000. Would you rather pay taxes on $144,000 or on $1,054,000? If you'd rather pay taxes on the $144,000 and take your retirement income tax-free, then the Roth IRA allows you to do that. What if you don't want to wait 40 years to become a tax-free millionaire? Well, then you need to put in more money into your Roth IRA and or get a better return on your investments. Unfortunately, there is a maximum to how much money you can put into your Roth IRA. A quick Google search will tell you how much it is. At the time I'm recording this, you can put in up to $6,000 if you're under 50 years old and up to $7,000 if you're over 50. But there are creative ways to get more money in there. For example, you can contribute to a different type of tax-sheltered retirement account and then move that money into your Roth IRA later with something called a direct transfer rollover. Direct transfer rollover. This is super important because you don't want to take the money out of one account and then put it into another account. That's going to have you run into all kinds of problems with tax consequences, penalties of taking money out early, and then contribution limits on how much you can put in your Roth IRA. What you want to do is have the money go directly from one account into the other account. That's called a direct transfer rollover. For example, since I own my own business, I can contribute to a Roth IRA, and I can also contribute to a SEP IRA. My business puts money into the SEP for me. Once it's in there, I can do a direct transfer rollover from my SEP into my Roth. But here's the tricky part. Because the SEP IRA is pre-tax, just like a traditional IRA, moving it into the Roth means that now I'm going to have to pay the taxes on it. But I can't take the money from the SEP to do that because I'll have to pay penalties. So I have to have enough cash on hand to pay the taxes myself. If you have a 401k from an old job that you're not working at anymore, you can do a direct transfer rollover into your Roth IRA for some or all of it. You just want to plan accordingly if you have to save up cash on hand to pay the taxes. You can do something similar if you make too much money to contribute to a Roth IRA. You can still contribute to a traditional IRA, but over a certain income limit, you don't get that tax deduction anymore. You have to put after-tax money in. But that's fine, because you'd have to do that with the Roth IRA anyway. Then, once your money is in the traditional IRA, you can do a direct transfer rollover into your Roth IRA. That's called a backdoor Roth IRA. High-income earners like Dave Ramsey do this every year. They put after-tax money into a traditional IRA and then do a direct transfer rollover into a Roth IRA. There's even something called a mega backdoor Roth IRA, which lets you save up to $37,500 in your Roth IRA at the time of this video. Now, this one's more complicated and it isn't going to work for everyone, so you'll probably want to consult with a financial planner or tax professional before doing this, but I want to let you know about it because it can be really cool if you qualify. This is for people who have a 401k plan at work. If that's the case, find out if your 401k plan allows after-tax contributions. And right now, as I'm recording this video, I'm like, I need to set up a 401k plan for my company so I can do this. About 43% of 401k plans have this option. After-tax contributions are like a separate bucket of money on top of your normal 401k contributions. Next, ask your human resources department or plan administrator if your employer offers in-service distributions to a Roth IRA. That means they'll let you take money out of your 401k plan while you're still working there and roll it over into a Roth IRA. If you have a 401k that allows after-tax contributions, your employer offers in-service distributions, and you're able to invest more money after maxing out your regular 401k and Roth IRA contributions, then this might be a cool option for you. Bottom line, any money that you can get into your Roth IRA will allow you to grow money tax-free and take your retirement income tax-free. Just so you know, all of these accounts have specific rules, so do some research on the ones you're considering so you fully understand how they work. But depending on how much money you put in, how long you leave it invested, and what return you get on your investments, you could become a tax-free millionaire from this one strategy. And since you've made it this far, if you found this helpful, please tap the like button on this video if you haven't already done that. I really appreciate it. And please comment on the video and let me know, how did this land for you? Do you want me to make more videos on different ways to become a tax-free millionaire? If you'd like to see more videos from me around personal finance, money management, saving and investing, financial freedom, make sure to subscribe to this channel and click that little notification bell icon so you see when I make a new video. By the way, if you don't already have an account with Webull, you can get 2 free stocks when you deposit $100 on their platform with the link in the description, with those stocks being valued from $8 minimum all the way up to $1,850. So if you like free money, definitely check that out. And we talked about how to become a tax-free millionaire, but is $1 million the right number for you to get you to your goals? If you want to find out what it'll take for you personally to become financially free so you don't have to depend on your business, a job, the government, a partner, or anyone else for money, click the link in the description to download your free copy of my ebook, The Financial Freedom Formula. It's a quick read and it'll give you a lot of clarity and inspiration. Thanks for watching and happy investing.